In this video, I'll share a free and simple trading view strategy that can generate significant profits in the long run. This versatile strategy works seamlessly with crypto, forex, and stocks, boasting an impressive accuracy rate. To ensure the effectiveness of any strategy before applying it to your real account, it's crucial to backtest it at least 100 times. We recommend using TradeGenius, an exceptional backtesting platform, to streamline this essential step. For those interested in utilizing TradeGenius for backtesting, simply follow the link in the video description below and receive an amazing bundle of bonuses worth almost $900. This includes the full step-by-step backtesting plan to a full course on building profitable mechanical trading strategies and 4 ready-made high-quality strategies. But hurry, this offer is only available for a limited time. Alright, let's get back to the strategy. Firstly, we'll add the whole trend indicator to our chart. This will be our signal generator for the strategy. Once we've added it, we'll adjust its settings together. Next, we'll add the trend trigger factor indicator to our chart. This oscillator will help us provide an extra layer of confirmation for our trades. Some adjustments are need to be done before using it, so follow my steps. And now here's how we trade using these indicators. For initiating a sell trade, the first step to observe the whole trend indicator. Wait for it to give a sell signal. This happens when the whole trend line turns red, indicating a potential downward trend in the market. Next, turn your attention to the Trend Trigger Factor or TTF indicator. The TTF serves as an oscillator identifying overbought and oversold areas in the market. For a sell trade, you need to ensure that the TTF is in the overbought area. This suggests that the asset is potentially overpriced and could experience a price decrease. So once both these conditions are satisfied, a sell signal from the whole trend and TTF in the overbought area, you're in a good position to open a sell trade. This dual confirmation increases the likelihood of a successful trade. Now, onto managing your trade risk. It's crucial to set a stop loss to limit potential losses if the market moves against your prediction. A good practice is to place the stop loss at the recent swing high. This is the highest price point reached before the market started moving downwards. Finally, let's talk about your exit strategy. To ensure a profitable trade, aim for a trade target that is 1.5 times your risk. This means if you risk $100 on the trade, your target profit should be $150. This risk to reward ratio of 1 to 1.5 helps ensure that your potential profits outweigh your potential losses over many trades. And for a buy trade, look for a buy signal from the whole trend indicator. After that, ensure that the TTF is in the oversold area. So if both conditions are met, now you can open a buy position. To manage your trade risk, set a stop loss at the recent swing. And for a profitable exit strategy, aim for the target profit at 1.5 times your risk. Now, let's ensure our strategy is solid by running a backtest. We'll apply our strategy to the Ethereum chart with a 5-minute time frame. We'll set our initial amount at $1,000 and adjust our risk-reward ratio to 1 to 1.5. After executing 100 trades, we've got some interesting results. Our strategy win rate came out to be 62% and we managed to gain a profit of 190%. The profit factor of our strategy was a very impressive 2.45. During the course of our strategy, we experienced 11 consecutive wins and 5 consecutive losses. So these results show the potential of our strategy. But let me tell you, I've crafted a simple strategy, especially for those who prefer an easygoing approach. With this, you can effortlessly earn money from trading. So there's no way you should miss out on this recommended video.